Ladies and gentlemen, good day and welcome to the Patel Integrated Logistics Q4 and FY24 earnings conference call hosted by PhillipCapital India Private Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikram Vilas Suryavanshi from PhillipCapital India Private Limited. Thank you and over to you, sir.
Thank you, Manuja. Good afternoon and very warm welcome to everyone. Thank you for being on a call of Patel Integrated Limited. We are happy to have the management with us here today for question and answer session with the investment community. The management is represented by Mr. Mahesh Pogla, Executive Director, and Mr. Avinash Paul Raj, Company Secretary. Before we start with the question and answer session, we will have opening comments from the management. And I hand over the call to Mr. Mahesh Pogla for opening comments. Over to you, sir.
Thank you, Vikram and his team for arranging this call. Very warm welcome to all for taking their valuable time for attending earnings calls of Patel Integrated Logistics Limited. We are very happy to inform you that quarterly turnover, including GST, is more than 100 crore. Quarterly, more than 100 crore. Now, let me explain in brief financials of the company for the quarter and the full year ended 31st March 2024. So let me first go to the profit and loss account of the company. That is we have for the quarter ended 31st March 2024, income from operation is 101 crore. Other operating income is 12 lakh. Total gross income from operation is 101 crore 30 lakh. Less goods and service tax 15 crore 45 lakh. That gives us a total income from operation 85 crore 85 lakh net of GST. Other income is 53 lakh. Total income including total income from operation and other income is the 86 crore 38 lakh 0.80. In that, the expenses, if you minus operation cost, is a 77 crore 95 lakh. Employee benefit expenses are 2 crore 96 lakh. Finance cost 81 lakh. Depreciation and amortization is 69 lakh or 70 lakh rounded off. Administrative and other expenses are 2 crore 15 lakh. Then giving a total expenses of 84 crore 59 lakh. That if I minus from the total income, then the profit before exceptional and before tax is 1 crore 79 lakh 78,000. Profit if I deduct the tax, then the profit after the tax is coming 1 crore 66 lakh 77,000 for the quarter ended 31st March 2024. Let me repeat, it is the full year 31st March 2024. Let me give you the full year figure as well. Full year 31st March 2024 income from operation is 342 crore 37 lakh. Other operating income is 47 lakh. Total gross income from operation is 342 crore 84 lakh. In that, if we minus goods and service tax, 52 crore 29 lakh, then total income from operation is 290 crore 54 lakh, 290 crore 64 lakh. Other income is 1 crore 97 for the full year, and giving us total income, including the income from operation and other income, is 292 crore 52 lakh. In that, expenses are operation cost of 251 crore 62 lakh. Employee benefit expenses are 12 crore 47 lakh. Finance cost 2 crore 59 lakh. Depreciation and amortization is 2 crore 80 lakh. Admin and other expenses are 7 crore 35. Total expenses are for the year ended 31st March 2024 each 286 crore 84 lakh, giving us a profit before tax of 5 crore 67 lakh, 5 crore 67 lakh 56,000. In that, if I reduce the taxes, the net profit for the full year 31st March 2024 is 5 crore 53 lakh 81,000, giving us the EPS earning per share of 86 paisa for the full year. Now let me give you some balance sheet item figure also for the understanding of the listeners. For the March 2024, as on, company has a property, plant and equipment of 34 crore 89 lakh 50,000. Capital work in progress of 5 lakh 41,000. Investment property are 13 crore 18 lakh 27,000. Intangible assets are 42 lakh 57,000. Financial assets of the company in non-current investments are each 1 crore 96 lakh 87,000. Loans 70 lakh. Other financial assets are 33,000. I beg pardon, repeat the figure. 2 crore 55 lakh 33,000. And that giving us the total non-current assets of the company as 53 crore 78 lakh. Current assets are inventory nil. Financial assets, current investment is 2 crore 74 lakh. Trade receivables, repeat, trade receivables are 90 crore 76 lakh 27,000. Cash and cash equivalent of the company is 13 crore 69 lakh. Bank balance other than above are 18 crore 66 lakh. The company has its cash and bank balance more than 31 crore. Loans nil. Other financial assets are 1 crore 47. Total current assets of the company is 10 crore 91 lakh. Total assets of the company is 192 crore. Now let me give you the liability side of the balance sheet as well. Equity share capital is 64 crore 58 lakh. Other equity is 54 crore 73 lakh. Giving a total equity net worth of the company is 119 crore 32 lakh 0.22. Sorry, repeating. 119 crore 32 lakh 22,000. Non-current liabilities, financial liabilities, borrowing, company had 8 crore 56 lakh. Other financial liabilities are 3 crore 52. Deferred tax liability 1 crore 90. Current liabilities, borrowing 15 crore 55. Trade payable 16 crore 1665.28. 16 crore 65 lakh 28,000. Other financial liabilities are 24 lakh. Other current liabilities are 26 crore 25 lakh 68,000. Total current liability is 58 crore 71 lakh 39,000. Total current liability is 58 crore 71 lakh 39,000. Company has a cash flow improved. Company's cash flow has been improved compared to the earlier years. So let me little bit give you the figures of the cash flow as well. Operating profit before working capital changes are 10 crore 26 lakh 83,000. If I trade and other receivable, trade and other payable, if I adjust, then cash generated from operation is 14 crore 85 lakh, 14 crore 85 lakh 9,000. After then the taxes net cash from operating activities 12 crore 21 lakh 4,000. After adjustment of the taxes, company generated the net cash from operating activities 12 crore 21 lakh. Then we have a cash flow from investing and purchase of fixed assets, sale of fixed assets, or movement in fixed deposits. Company's fixed deposits, now public fixed deposit company used to have, that has become now almost negligible. We have paid completely, only the 2 lakh is somebody had to take the money back from us. Otherwise, company had entirely paid back its public fixed deposits, which were earlier reflecting in the balance sheet. So net cash in investing activity is positive 8 crore 71 lakh 57,000. From financing activity, as I was explaining to you, repayment of public fixed deposit of 2 crore 25 lakh 62,000. And by that, the public fixed deposit become nil. Proceeds from long-term borrowing is repayment of 4 crore 47 lakh. Interest paid 2 crore 88. Dividend paid 64 lakh. As a result, the company has become net debt-free, and company is carrying a closing balance of cash and cash equivalent of 17 crore 49 lakh. Liquidity position of company has been improved very well this year. As I was explaining you the financial numbers, let me give you some percentage figures as well to understand more about the things. Gross income from operations grew by 33% year on year to 101 crore as compared to 76 crore in Q4 FY24 and 11% quarter on quarter to 101 crore as compared to 91 crore in Q4 FY24. This is due to, as we were explaining in earlier calls, company is giving lot of focus on turnover and economic improvement overall in the country also help us in improving our top line. Now come to the bottom line. Profit after tax increased by 22% year on year to 1.67 crore from 1.37 crore, and quarter on quarter by 11% from 1.50 crore to 1.67 crore. So there is a improvement in the year on year. There is always also an improvement on quarter. This definitely give us when the top line increase and the bottom line increase. Let me give you the volume figure also. Volume figure of the quarter increased by 21% to 15,276 tons. 15,276 tons from 12,590 tons year on year quarterly. And on quarter, 1% increase in the volume from 15,115 tons to 15,276 tons. So there is a increase in the volume quarter-wise also and year-on-year also. Further, just to give you the update on the quarter, yes, we have a geopolitical tension. As we all know, Red Sea crisis are there. Still, the Indian economy has done very well. With the government focus on extending airports to 240 by 2030, this move will drive significant growth in the logistics sector. This proactive approach, combined with our efforts, has led to year-on-year turnover growth. Our FY2024 EBITDA margin, our PAT has, as we can see, PAT has shown a growth. Further, as we can see about the country as a whole, the Airport Authority of India planned capital expenditure of 30,000 crore over 5 years, and the government target of 1,000 Udan routes to create 1,000 Udan routes will further boost the expansion of logistics into new territories. The Indian aviation sector rapid growth highlighted starting of the commercial operations by new airline FY91. We have a new airline in this quarter at FY91, and further the Indian Airlines, as we know also that they are given a big order, fleet expansion will be a very key driver of logistics sector growth in FY25, and we expect to keep the momentum for us as a company also. The numbers which we have in the quarter going by, we expect to keep that momentum. Further, we are expecting some income tax refunds, and so we will further give us the liquidity. We are also, as we understood, this is the follow-up from the last quarter phone call. We have a property at Car. We are actively pursuing for how to monetize and how to use the property in a proper way. In that regard, we also are getting a confirmed or not. I will tell you what confirmed. We are getting a good interest from the big brands for operating that property, and but further details cannot be shared at this stage because it is in discussion stage. But just to assure you, we are actively discussing on how to use our properties which are there in the company, so that the company's financial get more improved and be able to reward to all the stakeholders of the company. I will stop here only. Now over to Vikram and his team.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Hi, thanks for the opportunity. So my first question is, do you have any plan to lease aircraft for transporting freight?
Can you repeat, please?
Do you have any plan to lease aircraft for transporting freight?
Let me explain the question, then you can take your further question. We definitely have no plan to own any aircraft or any lease, because we have a tie-up with all the airlines and the way we want to work in asset-light model. So we don't have any plan to lease any aircraft.
Okay. So can you comment on the kind of EBITDA margin that the leasing of aircraft like business generally get?
I can talk about our business where we are not owning the aircraft, and the top generally what we are earning is around near to the 4 to 5%.
Okay, fair enough. And regarding the difference between our trade payables and receivables, it's quite high, which is regarding the difference between trade payables and receivables, that is quite high, which is keeping our significant amount of our capital occupied. Do you have any scope to increase our trade payables or reduce our trade receivables or discount any receivables?
Good question, actually. Correct. Trade payables, we have, as you can see from the earlier, our trade payables have increased. That reduce our working capital requirement. Regarding the trade receivables, definitely it is industry trend and we are focusing, but we more than the trade receivables, we will focus on the turnover also, and trade receivables which are there as per the industry norms, and what a bill discounting we can do, but it will reduce the margin and we don't require money like that. As you can see, company has a surplus cash flow.
Okay, so do we discount any receivables?
No, but just to give you further, we have taken an insurance also for our trade receivable from the SBI Life. So if any unfortunate event happens, then we can get the backup from the insurance company. That we have done.
Okay, so can you comment on how long in terms of day that payable credits are issued to us?
Yeah, so there is a normal industry practice of between 90 to 120 days.
Okay, fair enough. And next question is regarding the issue related to retaining of pilots for the airlines in India. Do you see any of your airline partners affected by it?
Yes, that is the issue of pilot strike and all these are there. But what in our case, as we don't depend on a single airline, we have a tie-up starting from Indigo, Vistara, Air India, SpiceJet, whatever name, Akasa, new airlines. We have a tie-up with all the airlines, so our operations don't get affected by this strike.
Okay. So my last question is regarding the promoter holding. It's like reducing quarter on quarter from many quarters. So any comment on that?
That will be not be there. But anything I can tell you, promoters have done there were the previous two right issues were there. Their promoters have shown their commitment. They have fully contributed more than what was required of their eligible contribution. That much only I can tell you right now.
Okay, fair enough. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Avinash. The next question is from the line of Vikram Suryavanshi from Phillip Capital. Please go ahead.
Okay, thank you. Sir, you gave the volume for this quarter, but what was the volume for full year on this year and last year on full year basis?
Yes, Vikram. We have, just to tell you, for the full year volume in the tonnage. In the tonnage is there of the 57,229 is the tonnage volume for the full year. 57,229.
Compared to last year, full year?
Of the 54,230.
230.
Yeah.
Oh.
So there is a increase in the turnover is there for the full year as well.
Right. And is there any mix between international and domestic volume compared to last year and this year? How is that mix changing?
Yeah, both. In our case, basically both have increased. In the domestic, we are able to increase from 48,447 of the last year to 49,662. That's domestic, no?
Hello.
Yeah, I was able to get the Vikram. I was able to convey you domestic turnover, domestic load figure, domestic body figure.
I got like 48,447, which increased to 49,662.
Correct. Very well. Very well.
So domestic growth is hardly 2 to 3%. Most of the growth has come from international.
Yeah, international is one of the things this time triggered up. We have little bit cautious in case of the domestic for this year. So which we expected to improve in future, but this year we were little cautious considering the receivables only. We were little cautious.
Okay, understood. And what was the revenue from the warehousing assets what we have in Chennai and Bangalore? For full year basis, how much they are able to contribute, and what are our plans regarding that in future?
Yeah, just to clarify, we don't have right now in Chennai because we have sold the Chennai land, and we are now trying to focus on the Pune from that money. But that is not till now in discussion stage, so I will not be able to comment more on that, Pune. And Bangalore is basically right now in the rental model. So it is given to one public listed company only. So it is on the rental model is going on. And definitely we are thinking of something to do in the Pune with the money we have and to create a warehouse. But it's still at the discussion stage. Let us see how the thing unfolds.
So Bangalore, how much is giving us a rental yield on annual basis, and is it a
rental yield of around 4 to 5 lakh rupees
per month?
Per month, sorry. Per month.
Okay, got it.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, thank you again for the opportunity. And my question is about do we have fixed price contracts or variable price contracts? And how we pass on the price increases by the airlines?
Yeah, correct. We basically have our main component of the variable cost is aviation turbine fuel, ATF. If the ATF prices are increasing or decreasing, we pass on to customer, I mean to say. So we don't get affected by the variation in the oil prices as we see in the international. And further, with the customer also and with the airlines also, we don't we go by the policy of open contract, because prices can vary for the airline to airline, timing to timing, day to day. So we follow in that way only, and definitely we follow the policy of not a fixed contract.
So what I can understand is that the variable cost is passed on real-time basis, right?
Yeah.
Okay. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Vikram Suryavanshi from Phillip Capital. Please go ahead.
Yes, sir. So can you highlight about how is the pricing environment, and are we seeing improvement in the pricing environment or profitability for us, or in terms of volume growth, in terms of some broad outlook going forward?
Yes, because the prices are getting hardened definitely as the GST prices and all the other prices happen. So definitely, because what is happening, if the ocean routes are not available, then people have to go for the air route. So and definitely the prices are getting hardened. We are expect to be there are a shortage of the capacity of the airlines also we experienced in the month of March, which is getting aged out now because the year-end pressure has come down. But at the same time, as I can tell you, from our company point of view, the things are looking good only. And as we promised, we are able to deliver the turnover, which is a quarterly turnover of 101 crore, including GST. So things are looking good, and then as we all know, we are in the election season, and once the things are getting more clear in the month of June, and as the economy improves, we are also expecting the things to get improved only for the logistics sector and particularly for our aviation sector as well.
Okay, got it. And one just to extend on the warehousing side, initially we thought to expand even in Ahmedabad, Delhi, and other areas. But now looking, since we have closed Chennai, so in long term, what would be thought process, the kind of cash flow which is coming, will we use mainly to expand our market share in the air side business, or even like warehousing could be another growth driver for going forward?
Yeah, correct. As I was explaining you, definitely what Chennai we only not going right now. But in place of Chennai, we are actively exploring for the Pune area, and at the same time, we are also thinking of not only depend on the aviation or air aviation. As you know, this company was earlier known as Patel Roadways, so we may explore that area also in the going ahead. That is also in the active discussion of our board. So we are actively looking for the opportunity, both inorganic, organic, to grow the business, to expand the company.
Understood, sir. Yeah.
Thank you. Ladies and gentlemen, that was the last question for the day. I now hand the conference over to the management for closing comments. Over to you, sir.
Yeah. Thank you once again, Vikram and his team, for arranging this earnings call. We are, as I can tell you, things are looking good for the country as well as for our aviation sector, where we are right now earning major amount of earnings. And in particular, company is also doing well with the support of all of you, with all the stakeholders. I thank you again. I once again thank you for arranging the call. Thank you.
Thank you. On behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.